100% they can edit the shit out of it. They can put whatever they want, any graphics or anything that go with it. That would be great.
Hmm.
All right, so let's start. You ready?
I think so. Yeah.
Okay. All right, here we go.
Okay.
All right. Today, I am super, super excited to be joined by a good friend of mine, Joe from WEquil Capital. Joe is just an incredibly smart guy who is, always early, knows what's going on the most intimate levels. So it is really, really a pleasure to have him on today. So, Joe, thank you so much.
Wow. Okay. Well, I'll try not to disappoint. No, it's really good to be here. We were introduced by a mutual friend, Ari, who he's been introducing me to people over the past year, and I continue to be impressed every single time. And this was certainly no exception. I really like your work. Yesterday, I watched 3 of your YouTube videos. Um, Exceptional quality, very useful content. Also, the team also noted that unlike a lot of other channels, you're very thoughtful about what you believe, but also very thoughtful about the risks and providing proper disclaimers and recognizing uncertainty in the space and providing really educational content that we are honored and privileged to be associated with. So yeah, very happy to be here.
Really appreciate that. Thank you so much. I try. It's the crypto space it's the Wild West out there, right? You get a lot of people, you go on YouTube and there's a lot of crazy thumbnails and big predictions and stuff. I think it's important to keep people, grounded. So I appreciate you saying that. So tell me a little bit about your background and how you got, first of all, in general, how you got into investing and everything else, but how did you get into the crypto space?
Sure. So my name's Joseph McPhail. I'm the CEO, founder of WEquil Group, and I've been into active investing for about a decade. That started getting into crypto around 2016. So we made our first investment in Bitcoin and Ethereum. Bitcoin in 2016, and then I think we bought Ethereum at around $10 in early 2017. But my background professionally started in essentially working in the finance industry. So went to work for Fannie Mae right after the financial crisis, helping them to rebuild home price forecasting valuation models, a lot of credit risk analysis. So looking at loss reserves. Then I went into working in consulting, so managing teams globally at PricewaterhouseCoopers, Ernst& Young, clients primarily being banks, hedge funds, other financial institutions. So applying essentially, quant analysis, machine learning models. So then in terms of investing, some of that just applying some of what I was doing professionally at home for my own private investments. I'm also quite lucky and privileged to be married to an amazing woman, Dr. Lee Hong McPhail, who she has her PhD in econ. We both have CFAs and FRMs and strings of acronyms but we recently published a chapter in a book on machine learning implications for banking regulation. Although I think a lot of that paper, it's about a 30-page paper, has much broader implications. Some of those implications relating to crypto. The beginning of WEquil Group started with Intuit Econ, which is now WEquil Capital. So this would be where we publish a lot of our work, not just in the crypto space, but in investing more broadly. But WEquil Group also includes a school that my daughter Sume started during the pandemic. Really, it was almost like my younger daughter Isla, who's 9, Sume's 12. We're both heavily involved in doing that, and actually ended up being quite successful with this, which is something that Mom and I did not anticipate. And so that became a pillar of WEquil Group, as well as WEquil Startups, which is our startup incubator. And blockchain and crypto implications are spread out across all 3. So we're investing directly in crypto projects through WEquil Capital. We've had demo days and guest speakers coming in and talking with our school, including like say the leadership and founders of Tellercoin, which is trading on Coinbase. Also talking to another one of Juan's friends, or Ari's friends, Juan Pablo, over at Pleaser DAO, which securitized and sold off pieces of that for over a $500 million valuation, and had other developers coming and speaking with our students at the school. But we're also supporting a range of different Web3 blockchain initiatives within our startup incubator. So yeah, I'd say we're heavily involved and deeply interested in this ecosystem. So I'm excited to have a wide-ranging discussion across all of these. So I brought. I'll try to stay hydrated.
Stay hydrated. So with your finance background, when you first heard about crypto, when you started to first look into it, how did you think it would, how did you think it could potentially disrupt finance? Like, what originally came into your mind? Where did you see it going? Did you think this is just something I want to have exposure to because I get technology and I get finance, and like a digital finance is something that I get? Or did you sort of have a larger vision of where it is now and where it potentially could go?
So we do a lot of writing to try to help us learn. It's a process we call deep learning, where we do a lot of socializing of ideas. We started really writing a lot about crypto in early 2017, around February, March. That's when we published our manifesto on crypto as an asset class. And later we pushed this up onto Seeking Alpha. But that was under my pseudonym. In the investing space, I was under a pseudonym, Bernard Baruch, for about 7 years. But you can still find that publication. It's about a 9-pager. We called this What's Missing from Charlie Munger's Portfolio. And it was our version of this, crypto as this new asset class, and really trying to think about it within the context of a diversified portfolio. And initially, a lot of our interest was in Ethereum, although we have invested in a lot of other projects and ecosystems. But we actually first found out about Ethereum from Nick Fett, who's now the CTO of Teller, who came on and spoke with us. We did a podcast with him a couple months ago, and he was building on this platform. And he was solving real problems, and that's what they're continuing to do at Tellercoin. Essentially, building out an Oracle system that allows for data that's off of Web3 to be able to be used inside decentralized protocols. That's really critical because until like the past year or two, it was just extremely hard to find crypto projects that had integration off of the blockchain. But the promise was there. The fundamental value proposition of crypto has always been and will always be censorship resistance and decentralization, and all the implications of that, including and especially reducing the cost of collaboration and trust. So non-reliance on a third party to facilitate any kind of digital and increasingly non-digital kinds of services. So pretty much anything that you can find in the App Store, you can build into a blockchain. The question is whether or not that use case is something that derives a great deal of value from censorship resistance, decentralization, or not, because there are challenges with moving to a blockchain, right? Just fundamentally, you're talking about a technology that is not built for efficiency, it's built for being unstoppable, right? And so I think that that's something to keep in mind. That's always been the case. But of course, the variety of projects in the space continues to expand. And so I think it's just keeping up with the latest technology, looking at where people are building, looking at the actual solutions that are adding value to people's lives. That's a big shift, I think, for investors compared to the past. And so that's been part of our call this past year too, is that the space has matured to the point that if you're not solving real problems for real people, then it's going to be increasingly challenging to attract capital.
So that's a great segue into the next question. So you've been exceptionally early on a bunch of different things, not just in crypto, like a variety of different companies, like Tesla comes to mind. I know that our mutual friend had told me how early you were on Tesla, but let's take Ethereum, for example. What what does your process look like when you are digging into something? So you were looking at Bitcoin, you're looking at Ethereum. What made you sort of say, I think Ethereum has more value to it? And what is when you're really diving into that, tell me a little bit about that process and what it looks like.
That's a really good question. So I think it depends a lot on what the actual security is. So if you're looking at a company that has stable cash flows, that's been around with a proven business model for, decade plus, then, using traditional metrics like, price to earnings, price to sales, uh, dividends, these are very useful. As you venture into assets that are growing faster, less mature, less proven, moving up in adoption, the further you move away from having cash flows or value that you can discount into the present, um, the more challenging that is, and the more one needs to kind of expand out into other metrics. So with Ethereum, when we published our first article on Ethereum in early 2017, it was really looking at the market capitalization of all of the all of the ether, right? So ether is essentially a commodity, and that differentiates it, I think, from Bitcoin, right, where it's really more of a currency. And the value of that commodity depends on the value of decentralized applications on that ecosystem. So you can think of it as like an app store, but where the apps are decentralized but also complementary. So within Ethereum, you have, this is where you're seeing the vast majority of value locked, highly liquid, decentralized applications like Compound, Uniswap. And what that does is they actually add value to other protocols on that ecosystem. And so it's better than the App Store in the sense that apps within the App Store, they don't actually help each other, right? But they do within Ethereum, and then also other decentralized application protocols as well. So not just Ethereum. But I think looking at that at the time, I think it had like a $20 million market cap. We're thinking, okay, well, what is the value of this commodity that can be used in what was at the time essentially had a monopoly in a platform to build decentralized applications? And probably the most valuable one at the time was CryptoKitties. So this is all just kind of speculation about what that future could be, but we saw that as highly positive skew, and a lot of that's played out. We continue to see it as positive skew. We also maybe this is one area where we differ in the sense that I don't know if we differ here, but I think some folks look at like investing in crypto as don't invest more than you can afford to lose all, right? Well, people used to say that about stocks too, back in the 1920s. And then as the space matured, investors matured in the way that they looked at the asset class. And so I would look at, like, say, for example, Ethereum as one of these areas that can fit into a diversified portfolio. It's highly risky for sure and uncertain, but a lot of things are highly risky and uncertain. So we don't think that it has a risk of really going to zero, although of course it has risks of going down a lot. But so do investments generally, including some bonds. So yeah, that would be how we generally approach it at a high level.
So sticking with Ethereum, obviously Ethereum has done, the growth has been incredible, fueled by things like NFTs and a lot of decentralized apps. However, it's almost, it's now in this weird spot, right? Like just last week, Adidas does an NFT drop, and it was kind of a disaster, right? You had gas fees of $1,000 to do a transaction on top of the price of the NFT, which is just not sustainable. I mean, your average person who may have a few $100s to play with can't afford to spend $1,000 on gas, right? So it shows the inefficiencies of Ethereum. However, there's some incredible other networks that are out there that I've reviewed some of them: Avalanche, Solana. You've got Luna, which we've all seen also explosive growth and are more efficient. You look at Ethereum, 43 transactions per second. You look at Solana, 400 to 800,000 transactions per second, compared to, let's say, Visa, who does, 72,000 transactions per second, right? So there's obviously some amazing ones out there. Which are you most bullish on aside from Ethereum?
Great question. So I think one area where folks at WEquil Capital and I generally agree, but where I think investors broadly may disagree, this is like how we differentiate our strategy to some degree, is that we see a lot of complementarity within the broader crypto ecosystem. So rather than focusing on, say, okay, which one's going to win, we might look at this and say, okay, 10 years from now, how does this entire ecosystem function? And I'll give you an example of that. So Bitcoin maximalists might look at Bitcoin and say, okay, everything's going to go to zero but Bitcoin. Well, Bitcoin suffers from a lot of the same things that Ethereum does right now in terms of the slowness of transactions, but it's also built into like the entire ecosystem. Like every exchange has a lot of has at least one, Bitcoin to some other cryptocurrency. You can't say the same thing for other cryptocurrencies because it was first, right? But there are maybe a couple thousand cryptocurrencies that are fundamentally quite similar to Bitcoin, right? So you take Litecoin as one example. Well, what was Charlie Lee trying to do with this? Well, he wanted to create a silver to Bitcoin's gold, right? And it's very useful. So I've used Litecoin in the past to pay employees, and what they do with that. Well, they may not keep it in Litecoin. They may want to keep that in a basket of cryptocurrencies if their goal is to invest long term and try to reduce reliance in any one coin. But that provides some complementarity. It's not just about substitutes, right? Because maybe Bitcoin isn't the best cryptocurrency in the sense of doing a lot of transactions, but some people view this as a better storehold of value, if only because it's more liquid and larger, right? So it tends to be a little bit less volatile. I think the same thing is true within like platforms like Ethereum, right? So why is Ethereum so dominant within decentralized finance? Why does it have so much value locked? Well, part of that is because it was earlier. Part of that is because of the complementarity between all the apps on its app store, right, and the network effects there. But it's also playing this trade-off where it's more secure than some of these platforms that would go to the other extreme, like say Binance, where it's much more centralized, right? And so that centralization allows for speedier transactions, but it's not for free. You're talking about a space where everything's open source. So if there was some Pareto efficient way to improve a protocol, then the nodes on that protocol would vote to implement that improvement if it was strictly an improvement. So I'm very skeptical of anyone that says, oh, everything about this other protocol is better. If that were true, then Vitalik Buterin would say, okay, hey, and signal to the other leadership. It's not centralized. He can't just say it and then make it happen. But he has some sway, and he'd be like, hey, let's go ahead and adopt this. They're not going to do that. So where do you see other platforms that are competing with Ethereum to some degree? Where do you see them really making progress? Well, it's in decentralized applications where the risk of a 51% attack on their livelihoods is much lower. For example, in gaming, right, or pretty much any space where you don't have lots of savings involved, and you're not, dependent on this protocol to execute to make an insurance payout with something like, say, Ether risk, right? So that's good. That's good. You shouldn't be using Ethereum to do gaming because, yeah, it's cost prohibitive to do that. But that doesn't mean that that Ethereum and other protocols are necessarily competing completely. They're just doing better in their particular use case, given those trade-offs. That's the way I see it.
Yeah, no, I completely agree. I was talking to some guys that are building a game, and they're trying to figure out what network to go on, and they're originally looking at building on ETH. And when you look at microtransactions, which is how games these days, the games like Fortnite and Warzone, and they're all microtransaction based games. Like a lot of them are just free now. You can't have a $5 skin that costs $30 in gas fees. It's just not going to happen, right? It has to be on Solana where it's, a tenth of a penny. That's more realistic. That's the only way it's going to grow. So I am excited about ETH 2.0, and I think I think whenever it comes out, hopefully that will fix a lot of the problems. Where do you think, Bitcoin, we're just talking about it. It's obviously the king, but it's technically not very efficient. 4.3 transactions per second. The amount of energy needed to mine it is immense, whether it's green or not. You have to have a lot of energy to make it. Where do you think it's going to be in the next 5 years? Do you think it's still going to be the king? Do you think it's going to be dethroned? And what type of value do you think it could potentially have?
Great question. So we put out a forecast. I wouldn't necessarily say that this is a forecast, but it was taking the crypto cycle theory that many people espouse to. I don't necessarily espouse to that. I think that the space has gotten mature enough that expecting these predictable 3-year cycles is we may be past that point. But we put out a forecast in early October 2020 when Bitcoin was at 14,000. That was one of several calls. We've done quite well with our calls in the space. It's documented on Twitter. Basically over the past 2016 would be the beginning of that. And so, our calls have been pretty good there. But part of that call was essentially looking at if we continue to have that sort of cycle this time around. And I can share that tweet. Maybe we can share that in the video. But we were looking at Bitcoin potentially topping out in this cycle at around perhaps between 100 and 200,000. And then with Ethereum, we were expecting that this cycle we're more likely than not going to see a flippening. Flippening, for those who aren't familiar, would be Ethereum overtaking Bitcoin in terms of market cap. So right now, although it's highly uncertain and we could totally be wrong, we're really looking at the Ethereum flippening of Bitcoin as the potential sell signal for this space. I think that it's likely because of the amount of development that's happening on Ethereum and the value that it's giving people in a way that's challenging to substitute. Like, I would not be comfortable, using DeFi protocols on another platform because of the trade-offs that I was talking about earlier. But it's very easy to find substitutes for Bitcoin if your goal is to use this as a currency. It's also very challenging to see Bitcoin growing tremendously in terms of its market cap relative to that projection. And again, that projection is largely guesswork, right? Based on a cycle estimation that I don't necessarily completely agree with anyway, right? But you're talking about a global currency that's already like more valuable than the Russian ruble and is in the top 20 currencies in the world. But that's without the backing of a government requiring payment and taxes, and a growing number of substitutes. And so I think if that happens, I think if there's a flippening, I think that the amount of uncertainty in the space will go way up. And the reason why is, I think, embedded in the way that you phrased the question. It's like, hey, Bitcoin's always been king. What happens if it's not? And I think that the key question that should be on the minds of more Bitcoin maximalists would be, what percent of the folks that are part of this this community, what percent of them are in there because they believe that Bitcoin is going to continue to grow in value at the same rate that it has for the past 10 years? Because it can't. If it continued to do so, then in 3-4 years from now, it will be larger than like the combined market capitalizations of like all the stock markets in the world. So this is not going to happen. And so you're seeing it's losing dominance. It's basically taking the same trend that it started when Ethereum was first created in really started to take off in 2016, right? Losing that market share, not just to Ethereum, but to a growing number of cryptocurrencies. I think we're up to almost 15,000 globally now. At the time 5 years ago, it was like 300.
Yeah.
So when that happens, what's going to happen inside the minds of investors in the space that have already been dramatically underperforming the rest of the crypto space? Like, what percent of these folks are in it because they believe in it as a currency versus are in it because they just want to make money because they have been making money off of this for years?
Right.
So yeah, I think that that could be a rude awakening, and I think that there's going to be a period of reflection after that happens to say, well, what is the value of a cryptocurrency? How do we value these? How do we value commodities like ether versus cryptocurrencies versus collectibles versus organizational structures like DAOs? Um, I think that that's going to be a period of reckoning and reflection, and it could take many months or even a couple years to really figure out what that new, more mature crypto market looks like and how people will think about value in this space 3, 5, 10 years from now.
Yeah, I mean, excellent points. And so you mentioned DeFi, and Web 3.0 is kind of it's the new term, right? And even just I think yesterday, the day before, Jack Dorsey from Twitter and Elon Musk were kind of making fun of it a little bit. They were going back and forth, being like, we're still where is Web 3.0? We're looking for it. So we had Web 1.0 was people posting content and us being able to read it. And then Web 2.0, which is where we are now, which is people posting content and then others being able to collaborate, edit, add, and that type of thing. And then you've got Web 3.0, which is, takes it to a whole new level, being able to do things that you've never been able to really do before in terms of, interacting with websites and transacting and doing everything. And so where do you think Web 3.0 is going to go? Like, what excites you about Web 3.0? And do you think it will live up to, the hype that everybody is kind of talking about when it comes to it?
I think that there's a lot of good reasons to be bullish on Web 3. I think the challenge is going to be finding the areas where value is going to accrue, but the breadth of space to invest there, I think, is growing and already enormous. So um, I think we got to take that a piece at a time because there's a lot to unpack there.
For sure.
So I'll start with some of the work that we're doing at WEquil Startups in Web3 and some of the founders that we're talking to, people that we're working with. So just to give like a flavor for some examples of some of these projects. Um, so one would be like running a fund where you're helping people to invest in this space is really challenging. So we were looking into places for WEquil Capital to host our hedge fund, but it's really hard to find platforms that actually have a wide breadth of crypto assets to invest in. So like E-Trade, for example, where we were originally at several months ago, we started moving out that and moving to interactive brokers. But even there, they only have a few that are available. But if you look at DAOs, they provide a really powerful way to create a decentralized vehicle that essentially can function like a crypto hedge fund. And so we may end up moving, having two portfolios within that. One is for traditional assets, but then being able to weight exposure to a DAO, a DAO platform that's essentially functioning as a crypto hedge fund, right? That's quite powerful because of the structure of DAOs, you're able to have multiple people having governance tokens, and so built into the blockchain, you can avoid certain kinds of risk management issues, like having one person unilaterally being able to make all the decisions about where they're investing, right? Or being able to redeem your funds on demand using a dApp that can basically just liquidate assets in some proportion relative to that portfolio, and so you can take your money and go or come back anytime you want. I mean, that's just one of many, many applications of DAOs that we're looking at right now. So another one is one of these founders that we're talking to, working on a project called Cake. Initially, he was interested in just starting with an ICO. And then we talked for an hour, and I was like, hey, we've been doing a lot of work looking into the space, applying protocols like Aragon to help structure a decentralized governance structure that allows folks to pitch in and buy into this, right? And after that hour conversation, he was like, well, yeah, this makes a lot of sense. How do we do that? So we're helping folks look at DAOs as a vehicle for launching startups. That particular startup is a Web3 startup, but DAOs can be applied. And again, I'm just talking about DAOs. I haven't even gotten into other applications yet, but this is just one example. So we want to be using DAOs for startups across everything, even selling physical products. So imagine a founder comes in, he's a new founder, not a lot of experience, needs some money to get off the ground. They want to build, say, a customized 3D printing product. We've been doing a lot of work with 3D printers at WEquil School, thanks in part to my daughter, Sume. She got really, really into 3D printing. So, we've had a few students and a couple parents talk about doing this, and I'm looking at, okay, well, if you want to start a business around this, are we going to create a Delaware Corp like we've traditionally done? And provide equity, we can do that. But we can simultaneously take funds that VCs and angel investors like myself are putting into this project, put it into a DAO, give those investors some proportion of the governance token, so that if there are concerns about what the founder wants to do with those funds, then they actually have a mechanism through the blockchain to share those views and force at least some degree of consensus and communication. So it doesn't even have to be just Web3 development within startups that can use Web3 to augment. And I'll pause there before I even start to get into something else, but I'm just touching the surface when it comes to DAOs.
Yeah, DAOs are incredible. And you mentioned earlier, we have a mutual friend, Juan from Pleaser DAO, who's super smart guy and knows DAOs incredibly well. And they've done some amazing things. I encourage you to listen to the interview that Joe did with Juan Pablo, because it's incredible. I'll mention a few things. They bought the original Doge meme image for $4 million at auction, and they fractionalized it so that everyone could own a piece of that. So they created a dog, it was called Dog, and that was their coin. And their market cap was like, I think $500 million at the top, something absolutely crazy that they raised. But they're doing good things with it. So they also just recently bought the One of One Wu-Tang album, which was seized from the pharma bro, Martin Shkreli, who, bought it and took it. And so now they did that, and they want to eventually, I think, release that to everybody to listen to. And their most recent project, which is one I'm pretty passionate about, is their Free Ross project, which, for people that don't know, Ross Ulbricht, who was the creator of the Silk Road, who really, we could argue that he kind of brought crypto to the masses and really made it a currency, right? He had this underground marketplace where people could buy absolutely anything, from fake IDs to guns to crack to whatever it was. It was an open marketplace, and they used Bitcoin to transact. The sad thing about Ross is that he was a non-violent offender with no criminal history. Some of the biggest drug dealers on that site got 8 years, 10 years in jail. They threw Ross for just creating this website. They gave him double life plus 40 years. So he will never see the light of day ever again. This is like a 20-something-year-old super smart kid who, just a waste of talent. So they actually have been buying all of Ross's, they've been auctioning off Ross's hand-drawn pictures. He's a fantastic artist, and they're all one of ones. They've turned them into NFTs, and they've been matching as a donation like what people are bidding on these things. They raised, like, I think a couple $1 million for it. And their goal is to get Ross out of jail and to do a bunch of prison reform. So it's a very, very cool project. I'm talking too much on it, but you should definitely check it out.
No, I don't think you are. I think in fact, I think we should keep talking about DAOs for a second, because
absolutely
it goes. So that's another example of essentially the power of reducing trust and collaboration to near zero.
Right.
This is enormous. This is one of the ways in which I think it's part of the wave of the pandemic in terms of permanent changes in behavior. We are feeling this across WEquil Group. So, like, in terms of the number of people that are in our core team, it went from basically one hire to 20 in 6 months. 80% of these people are not in the United States.
Right.
Folks in Togo, Africa, India, Kenya, Panama. And where are they coming in from and why? Like, a lot of them are coming from Africa. And part of the reason why is because it's places, certain countries that have been held back geographically for decades, if not centuries, right? Like just because of the geography of Africa, it wasn't along the Silk Road between China and Europe, because it's along the same, they're along the same latitude, right? So there's a lot of
Right.
trade across here. So domesticatable plants, animals, all being transferred across that Silk Road. Of course, they're not going south into Africa,
Right.
because all the crops and the animals would die. Like they didn't evolve to survive in these changing climates. Neither did people. When people tried to go south too, they would be more susceptible to disease as well. So, and it's not just there. We're talking like Brazil. There's a huge startup boom that's going on in Brazil. Well, why hasn't there been a lot of investment in Brazil? Why have they been held back? Well, more than half the country is in a giant jungle. Like it's really, really hard to have social cohesion when people are so spread out. And so, like a lot of what's prevented emerging markets from finally emerging is that it's been really hard for people to build trust, right? To build trust within an organization, to build trust within a company, and be able to use that trust to grow a product. Then you have new technologies like even pre-blockchain, like Facebook. There are emerging market countries where 80% of the businesses in that country, like I think in Indonesia, I could be wrong about that particular country, but Southeast Asia, where the businesses are using Facebook as their primary platform, because they're able to have ratings and see comments from other people as a way of reducing that trust to near zero. Now, Facebook can be censored, right? As we know,
Right.
right? Twitter can be censored, as hopefully we all know, right? So now we're looking at this new technology, DAOs, right? Or NFTs. We should definitely talk about NFTs, because like Juan's thoughts on
Absolutely.
there blew my mind. But you're talking about new forms of organization that allow people that otherwise would not be able to really collaborate and share and create value together, now being able to do this without needing to trust any third party anywhere in the world, on demand. And they can pull resources to do incredible things, everything from trying to buy like a whole baseball team to freeing somebody from jail to pretty much anything. And these are new relationships, these are new organizations. And I don't think that investors or governments or just humans broadly have fully wrapped their heads or come anywhere close to realizing just how much the world has changed when you have that kind of dynamic and you're not dependent on traditional communities built mostly on geography or genetics to have the full spectrum of everyone in the world that they could potentially have a shared interest with and create value. So, blockchain is a huge part of that. I think FANG stocks and platform technologies are a part of that too, but that's just within DAOs. So is that enough about DAOs? And then we can get into
I,
NFTs
I
or
I like that. I'll tell you. So you mentioned NFTs, and we definitely have to jump on NFTs. So NFTs have obviously, they've exploded in popularity over the last 6 7 months, I would say. And everyone was creating an NFT. Every single celebrity, they all saw it as a way to just make some quick money because these things were easy. I mean, you knew the top was close when guys on Fiverr were saying, "I will create your 10,000 piece NFT collection for $1,500." That's when I knew it was time to starting to sell some of my more expensive NFTs. But you're seeing brands like Dolce Gabbana, Louis Vuitton, Nike, Adidas. They've all embraced NFTs. Where do you think NFTs are going to go, and what other areas do you think will take advantage of them? Like I think things like real estate and car ownership, like things like that, where, what a perfect way to verify ownership of a vehicle. I mean, there's so many industries that have huge fraud problems, and this could fix, the NFT technology. I'm not talking about having like a cute ape picture, but the technology behind that, I think, can solve so many problems in the real world. Where do you think NFTs are going to go, and what sort of excites you, and what industries do you see sort of adopting them?
great question. And again, I'm going to have to give my appreciation to Juan for educating me on this. I mean, when I first started talking about WEquil Group with him, um, his first response was, "You should start a DAO." And then also look into NFTs. Um, And he's right. If I could start WEquil Group again, I think I would have gone with a DAO right off the bat. But part of that actually does relate to NFTs and the fundamental value proposition of those. So, what gives an NFT value and what does not, right? Because I think that if you're going to look for speculation that's going to go to zero, I think that the NFT space would be a place to look. Let's start with what does not give NFTs value. I think that there are some areas where investors are hoping NFTs will solve problems that traditionally relied on governments and third parties. So, for example, enforcing property rights. This is an area where I think NFTs, if they're going to make progress in that space, I think it's maybe a decade plus into the future, but maybe never. And the reason why is because you're talking about physical property that is ultimately controlled by the state, right? So you can have an NFT that says that you own property, but at the end of the day, governments can go in there and basically change the rules and do whatever they want, right? And so, to some degree, you might see improvements in terms of the plumbing, right? So, like for example, there are central banks that are looking into using cryptocurrency, using blockchain technology to help facilitate reducing settlement times from 3-day, 2-day to basically within seconds, right? But that doesn't change the fact that they still control the currency, right? I think the same thing could happen with property rights, where maybe you see some local governments or some countries might implement something like an NFT or that same kind of technology to identify who owns what. But at the end of the day, you're still dependent on governments to enforce actual physical property right laws, for example. So where is that space that gives NFTs value, right? So I think that Juan's correct about social, really significant events and things like the doggy coin meme securitization, I think is brilliant, right? Because everybody knows about Dogecoin thanks to Elon Musk, right? And so, yeah, it's culturally significant. Will it retain that level of value? I have no idea. But I don't think that that's necessarily the most interesting and long-lasting value proposition for NFTs. But before I get into my theory on that, I think I might actually just pause and ask you, because I'm really curious. Like, what do you think fundamentally gives NFTs value?
Yeah, it's a great question. So I've been heavily involved in the NFT space for a long time, and I think that in the beginning it was the art, right? People were genuinely, they liked the art. That being said, you look at the value of CryptoPunks, you look at the value of Bored Apes. I mean, CryptoPunks, you're definitely not buying that for the art, right? There's like 80 pixels in the entire picture, right? So you're not buying that saying like, wow, that is just gorgeous. The Bored Ape Yacht Clubs, they definitely are, it's a cooler piece. They're very unique for the time. But again, that's something I would put on my wall, but I wouldn't, if they weren't worth what they're worth, I wouldn't put it on my wall. I think now utility is becoming the thing. And so, there were so many cash grab, pump and dump, oh, buy this thing, look at our roadmap. It has, look at all these amazing things we're going to do on our roadmap. And then they mint and everyone disappears. And it was just words on a website. I think people that were minting, they're minted out. They have become a little bit smarter in sort of saying, okay, I've been burned too many times. I minted this for, $350. Now it's worth $8 on the secondary market. I don't want to do that anymore. So now they're looking for utility. So show me a game, show me that I get access to a club, show me that I get access to exclusive events or some merchandise. I think that is where it's going to go. The other day I was hosting a Twitter Spaces with a couple of friends of mine, and they're big NFT influencers. And we were saying, I brought up an idea that imagine how cool it would be. So for certain industries, so the new Spider-Man movie's coming out and my kids are super excited about it. But imagine the traffic draw they could do if they said for the first 1,000 people who go to the movie, we're going to have a QR code, the beginning of the movie, just put your camera on it if you're in the audience, and you'll get an exclusive NFT. There's only 1,000 ever in existence, and you're the first ones there. You'd have lineups around the door. The news would cover it. Like there'd be, down the street, there'd be huge lineups and there'd be all this buzz about it. I think there's a ton people could do with NFTs to take advantage of what they can really do. And again, they're really not doing enough. And that's kind of where I think, so utility, I think, is the next big push in my opinion.
Okay, so I agree with that as a use case, although I think that has some element of cheating, just a
Okay.
bit. You know what I mean? So it's like
Sure.
the students at the school. We actually had a blockchain. Well, what was it? The theme was digital art and NFTs.
Okay.
And it was a joint demonstration of students at WEquil School, including my daughters, presenting articles that they had written about digital art and NFTs, the technology, but also making digital art. And we made our own collection that we want to sell. We're going to call it WEquil Punks. And we
I like it.
we
I'll
used
mint
the
some.
yeah, we made the exact, I mean, we used the same structure, the same number of I think it was 24 by 24 pixel. And it was great. It was like, I've got one too.
Awesome.
Um, and we're like, well, what gives this value, right? And we could give this value in a couple ways. One is that if folks made these NFTs, we could cheat a little bit and give it value by actually saying, if you have a WEquil Punk NFT, then you can have exclusive rights to join, this collaborative game we're going to do on WEquil Craft, which is like our
Sure.
metaverse educational solution. Right. We even talked about having kids that are building castles on WEquil Craft that they could, turn an NFT into this. And if you own one of the NFTs for this castle that you made, then you get to go inside the castle and be part of like this Hogwarts school that they made. So they got their own like houses kind of inspired by Harry Potter, right? So you can
Love
do
that.
that. You can do that, but you're kind of cheating a little bit in the same way that fiat currencies cheat, right? So
Right.
like the first fiat monies in the United States were really spearheaded by Benjamin Franklin, who pushed for fiat money because basically, like a lot of the governments, the 13 colonies, they had used up a lot of their hard money to buy physical goods from Britain, and so they didn't really have much left. So they had to use fiat currencies. And how did they give those value? By requiring payment of taxes in that currency, right? So you can cheat and force something to have value. But outside of that, I think that the most interesting value proposition for NFTs is the ability to signal that you're part of a community. And there's a lot to unpack with that,
A lot.
because the history of what creates community is fascinating. My 9-year-old daughter wrote an article about the cognitive revolution from 50,000 years ago. This is the beginning of human beings being able to imagine. You're talking about the first evidence of religions and certain cultural behaviors, like putting feathers in your hair, like having certain carvings on your weapons and wearing certain clothes. What was the value of these things? Well, it let people know you were part of their tribe. And so that was the beginning of human beings actually managing to coordinate in larger groups than 100 people. Before that, there's no evidence that we were able to do it. It was basically the same as every other mammal species, where if you didn't have an actual relationship with this person, if you ran into them in the woods, then you immediately hit this fight or flight response, right? Which is why we still get angry and do physical, like some people will still get physically violent, even though there's like no reason to ever do that in this modern society. It's only bad for you. But we still have that because of
Yeah.
millions of years of evolution, right? So we have this ability to create things and imagine things that previously did not exist. And we've been using these to try to create communities for 50,000 years, okay? Now you have this new technology that allows you to create a token that essentially signals something about your buy-in into the values or mission of a particular group of people that's totally decentralized across the world, right? So why would somebody buy a CryptoPunk, right? Or any one of these being
Blue
part of
chips.
some of these collections, right? Why
Yeah,
would you
yeah.
do that? Well, when you own that and people can verify that you're somebody who bought into these ideals, right? Then you got street cred, right? On Telegram and Discord and across, across the metaverse, like when you're talking to folks about who you are and what you do, then your ability to gain favor and build relationships with other people within that community skyrockets. And that has real value. Relationships with other people has real value. Being higher up in the social hierarchy, right? Like making reference to Jordan Peterson's lobster talk, right? If you want to be higher up in that social hierarchy within that community, buying into one of these NFTs, if it's the right NFT in the right community, can have a lot of value for years to come.
Well, it's
So,
funny you say that because I know people who I have good friends who bought Bored Ape Yacht Clubs recently over the last few months for 50 ETH, 65 ETH, like big sums of money. And they did it purely for networking. They're guys that they're successful in their own businesses, whatever they do, but some of them are involved in crypto startups or funds, those type of things. And they did it purely for the community, to be in the Telegram groups, to be in the Discords. And you should see how powerful it is. I was talking to a friend of mine the other day, and he had a question about something to do with regulation, and he posted it in there. And there's crypto lawyers, like there's all these resources that are in there just because he holds them, and they're all talking all day. And you're 100% right. Community is massive, and it's exactly why those specific projects that we just mentioned are doing so well. I'm curious to see how people will be able to do that in the future. I think that so many people sign up for newsletters, like with products, and they'll send you every once in a while. I think that you can use NFTs in the exact same way. So if you have, like, let's say Nike, and you have their NFT, it's a great way for Nike to interact directly with you. They can airdrop you something directly into your wallet as a thank you. Here's a Nike Christmas 3D digital t-shirt. We're only making 10,000. Thank you so much for doing that type of thing. That creates community, right? It allows them to do that. And if you buy that Nike NFT pass, that allows you to those of like Nike community events, and people can do that. And you're right, people want to be part of something. So that's a huge part of the NFT space. Now, you mentioned the metaverse and gaming. That's obviously like the big hype word right now. And we've seen a huge push with anything meta or gaming. Just had a massive run over the last few months, starting to cool off a little bit now, like with the whole market. But there's another, I think, uptick, and I think we're just early into it. Where do you think the metaverse is going to be? And do you think, in 5 years, we're all going to be, instead of us talking via Zoom, are we going to be wearing our Oculuses and doing it digitally, by the beach? How do you think that world will eventually look?
oh wow. So I wouldn't consider myself to be really well versed in this particular space. Um, but we do have a number of folks in our community that are really really into this, and they have all kinds of ideas. I mean, even just within, I think I mentioned WEquil Craft earlier. So this is a Minecraft server that we basically modified to be like an educational tool that leverages a lot of why kids like to play Roblox. And Roblox is one of these companies that is a top holding in, say, like the Meta ETF that's meant to try to capture some of this space, right? Um, so why are they so excited about it, and why does this seem to be, getting some traction? Yeah, I think that there's a lot of value to collaborating with people virtually, but I think that some of this is a little bit overhyped, in the sense that the term metaverse, like the joke that I've been telling people is, don't use the word internet anymore. Just every time you're going to use the word internet, say metaverse now, because it sounds cooler, right? So kids that are on WeQuil Craft, looking into NFTs or basically collaborating in a virtual environment. It's a 3D environment. They didn't know that they were in the metaverse, but apparently now they're part of the metaverse, right? I think that there's limitations to, like, yeah, we can do a lot virtually. I mean, I don't necessarily think that you need augmented reality glasses in order for you to be building relationships and building community. And so that's where I think some of this is a little bit overhyped. At the same time, Ready Player One is one of my favorite books. Uh, and yeah, there's a ton of stuff that we can do virtually within the school, for example, that we just can't do generally. So, for example, kids publishing articles on things that they're learning about. We want to do a demo day within this metaverse solution that we have, right, where they can come on with their parents, and we can generate like a huge stadium that the kids can help build, and they can be up there putting their articles inside Minecraft books that we can instantly teleport to all their parents. They can be looking at these the things that their kids are learning. Like, yeah, that's an enormous you know, value add potential for these students. But how much does being in a virtual 3D environment, like, how is that fundamentally different from what they were doing over Zoom before? Yeah, it's more fun. But I don't know. Yeah, I guess I'm just a little bit skeptical on some of the hype around metaverse.
Yeah, I don't disagree. I think that I was talking to someone the other day, and he was telling me that he reconnected with a bunch of friends over when during lockdowns, that they all started playing games and playing poker and those type of things, like very social things in the metaverse. And they had their VR headsets on, and they were just playing cards, and they were drinking and talking, like using audio to talk, and they're all in different parts of the world. And they all found it a much easier way to deal with the social isolation that a lot of people had during COVID. And I think that that's where there's been this significant uptick, that I think that a lot of people jumped into the metaverse, and they put on a headset to kind of maybe just explore the mountains, because when you're stuck like in a little condo or something and not allowed to go outside, I think mentally it took, obviously COVID was really, really trying on a lot of people, and it was a good outlet. So I'm excited about a lot of it. I do agree with you. I think there's a lot of hype. I think that the name Meta is just, metaverse is being thrown into absolutely everything, because people are raising tremendous amounts of money just using that as a catchphrase. So, but okay. So we mentioned COVID just now. We're in this weird spot. So new variant, people are nervous. Stock market, obviously, in the US stock market pulled back. We've seen a pullback across the boards. There's a lot of, like, people are very nervous. The media is really talking about it, and governments are nervous. You see there's lockdowns. I'm in Canada, and certain provinces are shutting down bars, and people are really scared. What do you think is going to happen? So we're from what I've been reading, the U.S. government, the Fed, is between kind of a rock and a hard place right now, because they've been propping up everything, just printing money to make sure the economy is great. Stock market's the highest it's ever been ever. The issue is, though, they can't keep doing this forever, because you keep printing money and then inflation gets even higher. And we're seeing that now. Inflation is obviously here. We haven't had, we're at inflation levels we haven't seen in almost 40 years, right? It's kind of scary. What do you think is going to happen? Because they can't keep propping things up, because if you do that, again, inflation, and if they stop, stock market could collapse, economy could collapse. Do you think that's going to be a good thing for crypto? Do you think it's going to be a bad thing for crypto? And what do you think is going to happen? I mean, what do you see from a macro level? What do you think the economy looks like over the next couple of years?
Oh boy, man, you don't ask easy questions.
I try
Um,
not to. I look who I have on. I can't throw easy questions at a guy as smart as you. Come on.
oh man. Well, yeah, I think that there are a lot of brilliant minds out there trying to make sense of what's happening. Um, Macro and investing generally, I think, is one of the hardest challenges that's out there. I think markets are mostly efficient most of the time, in part because so many people try really, really hard to beat markets. Um, and so that's all. That's all to say that nothing that we say should be interpreted as investing advice. I
Not
don't want.
financial advice.
Yeah,
Do your own
not.
research. Neither of us are
Yeah.
financial
There you go.
advisors.
There you go. So that being said, yes, we have a view. I think that even if one claims that they're ignorant about how to invest appropriately, or don't have a view on the macro economy. I think one of the things about learning how to invest is that at the end of the day, you still have to put your assets somewhere, right? So you can say you don't know, but at the end of the day, you still have to put your money somewhere, even if you decide that that is in US dollars, right? So sell everything really just means buy US dollars if you're in the United States.
Right.
So you still have to make a decision. So the approach that we've tried to take is to try to build a portfolio that over a very long period of time has positive skew in terms of its distribution, meaning that the outcome for large gains is very high, but the possibility of losses is lower over that long time horizon. And we do that by investing across, all asset classes for the most part. Although right now we're shorting bonds instead of being long bonds, and I can get into that. That actually relates to your premise. But I think that outside of periods like 2020, we did very well in 2020. We made 420% in a year. That's the most we've ever made by far. I think the best other year we ever had was maybe 100% during 2017, and a lot of that was because of crypto. So part of that was because the world was a lot simpler, in the sense that basically financial markets were being driven by what was happening with COVID, and then the Fed and fiscal response. And so if you were on top of that, then it was easier to see opportunities because the world was simplified and only being driven by like a few of these factors, right? Now, the world is extremely complex, as it usually is, where you can't count on COVID driving things. People are more and more comfortable with the idea that they need to move on with their lives, but they're also to varying degrees responding to what we learned during the pandemic about the value of virtual work, right? You have differing monetary policies across the world. That creates challenges. And so all these complexities, I think, lend themselves to trying to be humble about very short frequency forecasts and what's going to create value. So I think it's easier to take a longer view and try to say, okay, what does the world look like in 5 years time, in 10 years time, and what are the investments that are going to do well given that future. So that's generally at a high level how we try to think about investing. So I'll pause there, but I do want to specifically address your macro question, because we've put out a lot of work on that. So I'm happy to address it, but I just want to pause in case you wanted to respond to that.
No. I like 100% agreed. No, I'm very, very interested to hear what your macro take is on everything, for sure.
Okay. So I think that there are a lot of parallels that one could draw to the 1965 to 1970 period, which is the last time that we started to go into a rising rate and having more inflation and inflation uncertainty environment. And so we call this theme the correlation regime. So we've published a 35, 40 page slide deck thereabouts on the WEquil Capital website, which is currently intuitecon.com. So folks can take a look at that. But basically what the key risk here relates to the discount rate and the way that the discount rate is causes changes in correlations across assets broadly. So just to clarify here, correlation is how much assets move together. So a high correlation would mean that they tend to move together like this, right? And then an inverse correlation would be like this. And so in this research, we looked at stocks and bonds specifically going back 130 years. We found 6 different correlation regimes. Those correlation regimes tend to be driven by inflation and inflation uncertainty. So the reason for that is that both stocks, bonds, and I would say assets broadly, certainly the ones that produce cash flows, they all have a shared risk factor. And that risk factor is the discount rate, because for both stocks and bonds, you're discounting those future cash flows. And that's a function of both the benchmark rate and the risk premium, right? Well, in periods of very stable and low inflation, uh, the idiosyncratic factors that drive value for a particular security are going to end up dominating the price action for that security. But when you have rising inflation, what this fundamentally does is it increases the perception of what the discount rate on future cash flow should be. If that happens, then that causes valuations as a general rule for stocks and bonds and preferred stock and basically anything that produces cash flows to go down. And so that's why in periods like the 1965 all the way up to 1980 period, other inflationary periods as well, like heading into World War II, that during these periods of time, you end up having stocks and bonds go from like a negative correlation, like we've had in the United States for the past, or actually just broadly for the past 20 years, the correlation's been about negative 40 bips. So very strong negative correlation. It's never been that negative for so long. For most of the past 130 years, the average was actually a positive 16 bips. Well, why was that? Well, we haven't gone through this period of 30 more than 30 years of falling and stable inflation. And during that period of time, that's why you saw stocks and bonds actually having this diversification effect. That could change. And if that changes, it's going to mean trouble for the institutions that I used to consult for, these banks, hedge funds, Ray Dalio's risk parity strategy. Like that doesn't work when these correlations break down. And by break down, I mean correlations go up because of the shared risk factor. That's the biggest risk as we see it right now to global financial assets. Because if that happens, it's going to throw a lot of these models that I was building before, it's going to throw them out of whack. We're talking about value at risk models that are used to try to set margin for derivatives and set, risk parameters for retail investors too, like how much it costs to engage in futures, right? So that's a huge risk. What does that have to do with crypto? Crypto doesn't have cash flows, right? Right? Here's the problem. The problem is that assets generally, asset valuations across the board during the past 20, 30 years, they've all been going up because of the amount of money that's been printed, right? We've also just gone through a tremendously long period of stability. Even during the Cold War, there wasn't the same kind of wealth destruction that we had, nowhere close to what happened during the Great Depression and World War II, when wealth was just destroyed. That was like a low point for inequality around the world, but especially in the developed world. All that inequality developed during the 20s, the roaring 20s, just was slowly eroded away by inflation and instability and economic collapses around the world, all the way up through the end of World War II. And we had social cohesion being very, very strong at the end of World War II, right? At least across the developed world for the most part. Now, what happened since then? Well, we've had a 80-year period of, for the most part, very stable, innovation, wealth-destroying events were minuscule compared to the past like 1,000 years, where it was just, war and destruction and inflation was all over the place, right? So here we are at the end of this period, and we've never had such high inequality, and that inequality is driving changes in fiscal behavior with printing of trillions of dollars or spending of trillions of dollars that the feds had to come in and try to scoop up, right? Very little is being paid attention to, the way we got here. Why is there so much wealth? Well, capitalism and being able to try to facilitate investment so that we can continue to improve our quality of life, right? Like the internet didn't exist for like 30 years ago. Now it does, right? We all have computers in our pockets. Like this comes from innovation and investment that tends to happen during periods of stability. But if all that inequality starts to lend itself to, really poor decisions in terms of fiscal responsibility, and then the Fed, to some degree they can try to mitigate this, but it's really, really tough because, yeah, you can't just not be buying up the government's debt if the rest of the world is stepping away, which they could very well do. The jury's not out on that one yet. But if that starts to happen, then yeah, the Fed would probably have to come in and set yield curve controls, and they might even come in and backstop the corporate debt market again. And if that happens, then they can try to kick that can down the road even more. But eventually, there are certain things that they can't solve that way. I'll give just one example.
Sure.
The percent of businesses in the United States, or I should say like corporates, that are paying more in debt interest than they make in profits went from less than 1% of corporates in 2000. Now it's over 20%. Why? They've been able to refinance their debt and continue to build up this giant stockpile. And it's being facilitated. Why? By inequality and a lot of assets out there that they don't know where to go. So that's why they're buying, bonds at negative yields, like unheard of levels, right? That can't continue forever. And so at some point, I think that there needs to be a recognition that the amount of leverage in the system is too high, that fiscal responsibility needs to come in, and we can't just be spending at levels that are even greater than that of World War II relative to GDP. These are huge risks. So that's the scary, scary thing. Here's the beautiful part, and then I'll pause. Here's the beautiful thing. At no point in human history has humanity been more resilient. The fact that we came back from this pandemic roaring, the startup boom, the ability to innovate and collaborate across the world because of technologies like this FANG, platform ecostructure, the cloud, DAOs, virtual learning, virtual collaboration. Like, our economy more than ever globally is extremely resilient because of these new technologies. And so drawing parallels to the late 60s and early 70s, back when, so much of our economy was physical and measured in atoms instead of bits. And there wasn't the ability to, like, startup wasn't even a thing because software didn't really even exist, right? So you look at this world today, and I still am very optimistic, just because I think that technology is creating opportunities that it's just going to be really, really hard for central banks and governments to screw it up.
So that, I mean, incredible take. Completely agree with you. I'm very, very curious to see how things play out. And what is incredible is how much positive has come out of the pandemic. I mean, obviously, there's so much focus on the negative, and obviously it's horrible. The death, the virus. I mean, all those things. I mean, truly horrible. But there has been some positive that have come out of it. People have, because out of desperation, they've started side hustles, which have turned into real businesses, and they've left things, and they've changed their lives and gone in different directions. And like you said, being able to connect the world, having people work from other countries that were also in desperate situations, and now they're working remotely for people in the US or in Canada or Europe. And it is pretty amazing to see that. So you were talking about the technology and all this great stuff coming out of it. What are you most excited about in the crypto space? What do you think the next thing is going to be? What do you think the next big hype is going to be? What are you sort of looking into right now?
Oh man. This is going to sound a little bit like Kathy Wood at ARK Invest. So I think it's really hard to look at crypto in isolation anymore. I think it's really hard to look at just about anything anymore. That's part of the reason why our investing strategy has always been, across the board, looking at everything. I think that blockchain startups and just this general move that's reflected in record levels of private equity investment in Brazil, for example. Record numbers of people quitting their jobs to start companies. The Great Resignation. The ability for me and a gentleman named Prince Dede in Nigeria, and a college student that I met who's brilliant named Junaid, and another guy named Bob who's building Cake on this platform to provide like on-demand support for people that have crypto questions. Like, how did I meet these people, and why are we so excited about collaborating? Like, why was it so easy last minute for me to just send out a blast email on social media saying, hey, let's do an innovator symposium and have all these people show up and half of them talking about Web3? Many of them are still working at a company. It doesn't matter because, like, we all still control what's happening in our minds,
Right.
right? And so there's, if I were to try to find the single greatest point of opportunity that relates to crypto, I think it's with entrepreneurship and startups, and being able to use blockchain technology to things like DAOs and NFTs to facilitate value creation both on the blockchain and off the blockchain. And you can't even really look at that in isolation with just crypto. I think that works hand in hand with applications like we're doing a lot of Google app development. That's huge. That's actually how a lot of folks found out about WEquil Group, is because of the work that my daughter's done putting together Flutter apps for clients. So she leads all that. She also leads the school, or leads our startup incubator, building out these applications. So even within Flutter and Google Apps, we're seeing new developments where people are building in compatibility with MetaMask wallets, right? We want to be able to build that into WEquil School for students or parents that want to have like a WEquil coin favor token that they can use as like a fungible like to share appreciation for students that that liked each other's projects. Or if they come to a student's class, they can share, hey, here's some WEquil coin for that great lecture. You really inspired me to learn more about genomics technology, for example. I think it's innovating and integrating and using these technologies together and helping individual people that are really passionate about learning it or building on it. And if you're part of that, which we're definitely trying to do, I would say we're tip of the spear in terms of doing that. That this is where you're going to see some really, really incredible value add, because a lot of these things just weren't even possible. Maybe the technology was there before the pandemic, but the pandemic changed the way that people think. It's caused a paradigm shift in the way that people think about work and life. And the basic, the key force that's happening right now is that these two things of work and life are starting to come together into like this new personalized economy where the kind of work that has the most value is creative, and we're automating away all the things that really aren't human and freeing us to do the human things that bring us the most joy. And so I think blockchain is just part of that puzzle. But yeah, I'm really excited about startups, and how that relates to blockchain.
I love it. Uh, Listen, this has been uh, such a great chat. I mean, we had a fantastic conversation yesterday on the phone, and I learned a ton yesterday, even more now. I'm going to put a link to all of your socials. Where can we find you? Tell us just quickly, where everyone can find you on Twitter, your websites, and everything else. I'll link them in the description. But why don't you just tell us your handle so we can they can do it from here also.
Sure. Yeah. So WEquil Group, you can find that at wequil.com. That's WEquil.com. And we have 3 learning communities. So there's WEquil School, WEquil Capital, and WEquil Startups. And the shared thread there is innovation. So investors within WEquil Capital are very focused about innovation because we feel like this is where we can position ourselves for success in the future, especially given just the rapid pace of innovation. Within the school, we're doing incredible things there. Everything from, these kids are learning how to start companies. We're supporting them doing this. They're building products with 3D printers. They're building apps, publishing books on Kindle, and learning about technologies like genomics.
Wow.
They're excited to be there. They're showing up 7 days a week because they like learning by doing. So folks are free to join that. All of these are free platforms. We are creating value, and we do make revenue from some things, but the learning community pieces are the core of that, and that's free free to join. The last one would be WEquil Startups. All of these, again, you can access through WEquil.com. We're really focusing on trying to help new founders that are part of this startup boom, this great resignation. We have a lot of really sharp individuals that that are building in especially on Google technologies like Flutter, Firebase, but then also in Web3. And so bringing our expertise in those areas and combining that with founders that have a passion and expertise that are willing to drive is a big push there. And they all work together, which is the best part. So we'll have like founders and CEOs of their own startups come and speak with our students at WEquil School. We'll even source core users to rapidly prototype new solutions. And where do we find them? We find them within our learning communities. And then if folks are looking to raise money, well, it helps that we have an investing learning community right next door. Many of the dads there are also parents of kids in the school that I'm friends with. So it's really great. It's perfect for folks who are very curious and want to be surrounded by other people that share some of these interests so that they can learn and grow and create together. So that's what we do. And just been incredibly grateful to be working with our team over there. Big shout out to Mboya and Rishi and Vishal and my daughter Sume, who started the school. Like, wow, I mean, Mom and I never expected that. My wife, she's been incredibly supportive with me leaving my work at the FDIC after 7 years of representing them to the Bank of International Settlements and driving this. So just really appreciate that, and thank you so much for inviting me. This was, man, it was really great to hear your content. Man, we got a ton we can learn from you.
Listen, the feeling is more than mutual. I really appreciate it. It's please make sure you follow him on Twitter. I thank you guys so much for watching today's video. If you don't follow me on Twitter, follow me there. There's going to be tons of new content. And again, all the links will be down below. Joe, thanks so much, man. I really do appreciate it.
All right. Take care. Bye.
Thanks. All right. Converted. There we go.